Hello, friends and family. Candace-Marie Mitcham here, Berkshire Hathaway Home Services, Silverhawk Realty, East Idaho, and you are joining me for the Lending Lounge. This week we're back. Mike.Morrison from Movement Mortgage. Guess what? Rates are coming down a little bit. Stay tuned.
Mhm.
Hey, Mike, thanks so much for joining me again.
You are so welcome. I've missed this. So I'm so happy we're back together doing another lending lounge.
That's right. We're back in the saddle in perfect timing because rates have come down a little bit. Let's tell everybody what's going on.
Yeah. I mean, a little bit of great news. Where it always brings us so much joy as loan officers to deliver the news that rates are down. We've had an up and down year. From January to April, rates did go up, but we probably lost close to a point in rate from the start of the
Yeah.
year. But May has helped us out a lot. So these first 3 weeks as of this recording have been fantastic. Basically, we've dropped from an average close to 7.5 back down into the high sixes on an average basis. So wonderful news, terrific news, something that we definitely want to share with all the consumers out there. They're not watching this as closely as you and I might be. But yeah, the average in the high sixes, that means that some loans are lower than that. Some loans are higher than that. But certainly much better than we were, say, about 3 to 4 weeks ago. So really good stuff.
Well, and let's kind of educate. Obviously, there's always a lot of nuances when it comes
Yeah.
to lending, but broadly speaking, when we're talking about a change in 1/4%, 1/2%, how does that translate for our regular everyday buyer as far as their monthly spend?
Yeah, it depends on their price range, right? So, a 1/4 point. So let's take your average price. What would you say your average price is for your clients right now?
415.
415. So we'll do this live on the fly. So 415,000, let's say that's the loan amount,
Yep.
with a rate, say 7.4, which is where we were kind of in late April. That's going to
Yep.
be a principal and interest payment. So this does not include tax and insurance, but principal and interest of about 2873. And if
Okay.
we take a rate at 6.8 instead of 7.4, that's going to drop that down to 2705. So
Yeah.
that's almost $200 per month on the average home in your local market right now today.
Right.
That's
Yeah.
huge. That's
Yeah.
incredible.
I mean, that's a utility bill. That's a trip
Yep.
to the grocery store. That's
Yep.
nothing to sneeze at.
Absolutely. Yeah. I mean, almost $200 a month. That's almost 2,400 a year. That's fantastic. And so that's one way to look at it too, is that it saves you money per month. Another
Yeah.
way though, is if you're a buyer and your maximum was say $415,000
Right.
and the rates went down, well, your maximum is now probably 440 or 450,
Yeah.
460,
You get more
something like
buying
that.
power.
Yep. And now you can get the same payment as before, but you just got more house out of it. So
Yeah.
really good stuff when the rates go down.
Exactly. Now, and one of the things that we always like to mention, though, because some folks, and I understand that the rationale on the front end is I'm waiting for that lower rate before I want to jump into the market. Now, the flip side to that, because there's always pros and cons to every situation, is the lower the rates go down, the larger the buying pool. So
Yeah.
always something to remind folks of. So if
Yeah.
you're able to make it work where we're at now, you might want to jump into that market before your friends and neighbors are starting to compete with you for that property that you really want.
Yeah. Absolutely. Yeah. I mean, rates always go up and down, right? They're
Mhm.
never moving in a straight line. I always compare it if you're somebody that watches the stock market or have ever seen that on the news or on a financial website, right? It's just like the stock market. It's kind of a zigzag, and
Yeah.
and so we want to do our best, do the best we can to try to catch it at a low point. But yeah, if you're somebody who is on the sidelines right now saying, "Hey, I'd love for rates to be lower," there's a lot that makes sense about that.
Mhm.
You just have to remember what you just mentioned. There's probably a number of other people that are saying the exact same thing.
Yeah.
When the rates go lower, you all come back into the market. Now you're competing over the same houses. And in order to win that house, you have to bid a higher amount to get it.
Exactly.
Yeah.
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 Well, and that's why I think one of the things that's great about, well, there's a number of things working with a great lender, but you and I have done a number of deals for clients together, and I personally know that you and your team are kind of watching that, and you're
Yeah.
watching like, hey, last time you bought, you were at X%. Now the market has shifted. Does it make sense for you to refi? And you're kind of proactively reaching out to your clients. I think that's a great thing for buyers to be aware of when they're choosing a
Yeah.
lender, and also to remind them you can in fact refi when it makes sense for you too.
Yeah, absolutely. Absolutely. No, we're constantly keyed in on that. And, you know, like I mentioned at the beginning, it gives us great pleasure to tell people that rates are lower. That makes, just makes our lives easier, makes everybody happy. You know,
Yeah.
I think the biggest thing though that's come out of the first 4 or 5 months of the year is the reminder for people that they really should not try to time the interest rates.
Yeah.
Right. Timing the market is very difficult to do. It usually ends up in people being disappointed. I just want to tell a brief story. So,
Yeah.
you know, everybody's aware that we had great rates in 2020, 2021, and then leading into 2022, right? The 2022 the year started around 3% in interest rates, right? How wonderful was that?
Mm-hmm.
Um, and as we got to the summer, the people that were buying in the summer of 2022, they were getting anywhere from about 4 to 6% at that time, right? Depending on when they locked, what their scenario was, and that type of stuff. And I will tell you right now that the people in the summer of 2022, they were not happy, right? If we told them 5.5, 4.8, 6, they were not thrilled because 6 to 8 months earlier, it was 3%. So they weren't
Yeah.
thrilled about that. And they were, you know, many of them were wondering, all right, should I pull the trigger on this? Well, one thing that my team and I do is we do annual mortgage reviews. We do annual
Mm-hmm.
check-ins. So as those year anniversaries came up in the summer of 2023, we were calling those past clients from the summer of 2022 to, you know, check in. Hey, how's your house? Happy 1 year anniversary, right? They're really fun phone calls for us to make and check in with people. But one of the really surprising things that just hit me like a ton of bricks that as I did those in the summer of 23 was that the people that were mad about the rates in 22 were now absolutely thrilled that they had
Yeah.
pulled the trigger at that point because in the summer of 23, the rates were sixes, sevens, and sometimes eights.
Yeah.
And so
Yeah.
now a 4.8 or a 5.25, they were like, oh my gosh, I am so happy I pulled the
Yeah.
trigger. And so the reason why I bring that up is I think if you're on the fence right now and you're wondering like, oh man, our rate's going to go down, what, you know, what are they going to do? Don't worry about that. If you're qualified right now, buy the house. If the
Yes.
rates go down, which would be wonderful, you can then refinance and get a lower payment. But what if the rates go up? What if you
Yeah.
decide to wait and next spring you and I are doing this again and we're talking about a 9.25 rate? Where is that home buyer then, right? And then if
Right.
you waited, you're going to be very mad and you might not be able to buy at all. But if you
Yeah.
bought right now and let's say your rate was 6.8 right now, how happy would you feel if the rates are
Yeah.
9.25 next spring? You'd be like,
Yeah.
I'm a genius, right?
Yeah.
I beat the market. And so
Yes.
that's, I think one of the most important things for homeowners to remember is just if you're ready and qualified, right? And you can find houses, if Candace-Marie Mitcham can find you houses in her market that fit your needs, like don't try to time the rates.
Yeah. Yeah. Well, and same thing. I mean, you know, I'll tell you a story too. And I think you and I have talked about this before, but, you know, I had one of those homes at 2.65. I will
Mhm.
never see that rate again in my entire
No.
life. Right. But I couldn't stand the house. The house stressed me out every single day.
Mhm.
And my husband teases me about this, but it's true. The flow wasn't right and it just didn't work. Right.
Yeah. Yeah.
And so I found this house because, hello, what do? I walk in, I tour this house, and I'm like, I need to have it. I
Yeah.
want this house, right?
Yeah.
And so we got in and we bought our rate down to a 5%. So I went from a 2.65 to a 5, did the rate buy down, right?
Mhm.
And a week after being in that house, I asked my husband, I said, how do you feel in this house? He goes, you know what? I'm less stressed. It's the flow, buddy. But
Yeah.
the
Yeah.
point is that when you
Yeah.
find that house, you know, the rate can make sense depending on the situation. Because why
Yes.
do you want to go and work in a house that's too small, too big, the flow's not right? If
Yeah.
it makes sense for you financially, do it. Do it. And then you can always refi. There's always things that you can do financially in the long term to get that to be a better financial fit for you, right? But get
Absolutely.
the house you want when you want it, as long as you're making a responsible financial decision.
Yes, yes. Yeah, those, you know, those rates, it's understandable why so many people are tied to those rates that are twos and
Yeah.
threes from years ago.
Hard to let it go.
But if you're in the wrong house, there is a certain point at which just the
Yeah.
pain of everyday life where you're just
Mm-hmm.
not happy, how much would you pay extra to make your life happy literally on a daily basis? Like we're not
Yes.
talking once a year, we're not talking about a vacation. We're talking every day. You eat dinner,
Yeah.
you watch TV, you put your kids to bed. If that house is not right for you, it might be worth a couple $100 more to
Yeah.
be happy.
Yep. Yeah.
Yeah.
My house is my oasis. It's my
Yeah.
sanctuary. It's where I go to decompress. And so I needed to have something different. So for me, it was absolutely worth it. Right.
Yeah.
And, again, that's when you're working with the right professionals that are going to guide you towards the property you're looking for, right? Help you stay in those guide rails that you want to stay in. And then a lender who's going to say, here are the tools that we can use to make this fit for you.
Yeah.
Right.
Yeah,
Absolutely.
well,
Thank you for always keeping us up to date on what's going on. I know you were keeping a laser focus on the market for us
yes,
when it comes to rates. So we're going to be chatting again soon, and you're going to let us know what's going on.
absolutely. Anytime.